You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody, let's do it. Let's dance. It's Thursday, noon Central, 1 p.m. Eastern. Do you know where your children are? Hopefully you do, because they're probably hanging out with you at home right now. Yep, it's time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. Once again, hopefully you guys are enjoying the slew of content hitting it for you these days. We got a lot of content going back quite a ways. If you need more, we're there for you. The app, the best way to get it all. Of course, our website has it all as well, or via your platform of choice. We don't judge. And if you like what you hear, head on out to those platforms of choice and leave a review so other folks can continue to find this fine network. We can continue to grow this ungainly beast that is now rolling on for 13 plus years. Keep those questions, those comments coming as well. We do enjoy, I can't speak for all of us, I enjoy hearing from you guys. All right, and speaking of all of us here, let's see who's joining me on the old program today. First off, let's go out to a sleepy hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here, coming from the sleepy hamlet known as my son's and daughter's Lego room.
Watch out. That means it's a minefield to walk across, sir.
I wish you were lying, but you're not. I'm just staring at this right now, and you got to have shoes on or have very nimble feet, or you're going to have some tears come to the eyes.
Yeah, stepping on a Lego is just all sorts of horror. I'm surprised there haven't been massive class action lawsuits over the years from all the parents who have stepped on Legos. And if you've been there, you know what I'm talking about, listeners. And also joining us from across the other side of these here fine United States, all the way out pretty much to the end. He can see the end of it from his window, listeners. Yes, I'm talking about the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital, by way of a sleepy little hamlet known as Maine. Mr. Rock Lobster, welcome back to the program, sir.
It's good to be back to the program. In my hamlet, of course, our poor little town, like nobody, every business is closed except for the supermarket. So it's a little sadder and quieter than I would like it to be. I like it quiet, but I still like breathing people walking down the street, and we're currently short of that right now.
Yeah, you're already in a low zone for breathing people walking around, and now pretty much any chance you had of that is gone. It's pretty light around here even for breathing people walking around. We had that one brief day about a week ago where it was pushing 80 degrees, about 75 degrees, and everybody was out despite the orders. To the contrary, the police had to go round them all up, send them home. People were sunbathing by the banks of the river here in Chicago. And then, of course, what was it? Yesterday we have an ice storm and a 60-car pileup on their downtown highway. So it seems like it's mid-January here again in Chicago, which actually is a good thing. If we're all stuck inside, you don't want it to be nice. You want everyone to have a reason to stay inside. So there you go. The weather is cooperating, at least, with our pandemic as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Let's get to it, see what's on the tape here for today. Another weird one, kind of some mixed signals coming out of the streets and indeed the broad market, of course. We have more unemployment claims numbers coming out, and they're pretty terrible. I think the only thing that makes them seem slightly not as bad is the fact that they're not as bad as they were last time, because pretty much a lot of people have already claimed or filed for unemployment. We had more than 5 million new unemployment claims this week. Of course, that's on the heels, of course, of the death tolls spiking to daily high, almost 2,500 there as well. There's a little bit of changing of how the death tolls are being calculated as well, so that's kind of causing the numbers to go up a little bit as well. But on the economic side, of course, people have been threatening and worrying for a while that we're going to hit a 20% unemployment rate. Looks like they're factoring these numbers, backing them into about a 16% unemployment they're expecting, which around July timeframe, which is kind of interesting, a little bit longer term out there. Of course, going back historically, that's higher than pretty much any time since back in the dark days of the 30s, and you know what was going on back then, listeners. So from an economic destruction sense, this is clearly just unprecedented waters that we're all sailing through right now. What does that mean for the markets today? Well, kind of a weird mixed bag. We've got the NASDAQ actually up on the day, up over 0.5%, about 0.6% out there right now, while the S&P and the Dow taking a bit of a break. The S&P is the laggard of the bunch, only off almost 0.25%, and the Dow off about 0.75%. So kind of is a pick your market, pick your day kind of day out there, which is kind of interesting. Gold and crude also taking a break out there as well. Gold well north of that 1,700 level, threatening 7.5-year highs out there. So we'll talk about that more, of course, on TWIFO in a little bit. And crude can't get a lift. WTI still shy of the 20 handle. Biggest production cut pretty much in history. Yeah, we're back below the 20 handle. We'll talk about that a little bit later on today as well. Our old friend VIX, feeling the love, feeling the upside coming into showtime. It was at about 42.3. That puts it pretty close to where we were last show, down about 0.75 point. So all that quote-unquote vol that's been coming out, as people have been saying, which is not a lot, it's pretty much all back in. And that's kind of what we expected, really, here. At least I did on the show. And if we had a crystal ball, that's probably about where I would have been, close to where we were this time last week. Of course, there was no show last week, no vol views, due to the Good Friday holiday out there. So we'll have to make up for it with a fun one tomorrow. And VVIX, 133 coming into showtime, a little bit north of that now. That puts it down about 6 handles from where it was last show. And our old friend VXX, not giving up the erosion ghost anymore. We said before, that contango out there, or I should say that backwardation out there, which is lessening a little bit. Still not exactly good for those of you who like the VXX to be ever eroding. And so as we are right now, we're pretty much unched on VXX as well. It's at 41, down about 1/3 point or so from where it was this time last show. Let's go back around the horn again the way we came. Let's start in the unklest of Mike Lands. Mr. Uncle Mike, sir, kind of a weird one on the street today. What is lighting up your tape?
Well, what's lighting up my tape, a couple things. I'd recommend just kind of proceed with caution still within this market. I've talked about the 50% retracement mark for if you're a bear, and the market's gotten back or taken back roughly half of the losses that it's taken from peak to trough in the S&P 500. So we're still having a hard time kind of getting through that 50% mark. So I would definitely proceed with caution. Now, if you're a long-term investor, buy. You can't. That's kind of how I feel on that. But in the short term, if you're an aggressive trader, just be very cautious with where you're going with things. In terms of what's lighting up my tape, I think that if we want to solve this problem, this economic problem, maybe we should just instead of these trillions of dollars that we're doing in stimulus, just buy Amazon with all that money. It just seems Amazon and Netflix just seem like they can't lose lately. So just Trump maybe should just buy those two stocks and then maybe wait a few weeks and then the trillions will be doubled and then everybody's good, and then just send everybody a check, and then all is well. I mean, I'm speaking facetiously, of course, in case my compliance people are listening, but those are the two stocks that are really lighting up my tape right now, and it makes sense because Amazon was a phenomenal company before this virus came out, and Amazon is going to benefit because of this virus. And then when this virus is cured, Amazon's still going to benefit because all the smaller companies that went out of business that people aren't going to use anymore are going to go to Amazon. So Amazon is a phenomenal company, and it's pretty much showing that it's bulletproof today. So that's definitely one. Netflix, I think that's definitely a good company, of course, but I think people will be watching less Netflix once they're actually allowed to go outside again. So I think that's more of a shorter term ghost economy, so to speak, kind of like Zoom. I think Netflix is still going to be strong after the virus, but I don't think it's going to be excelling like Amazon is. But definitely a lot of names that are happening. With the poor unemployment numbers, I don't think the market's really surprised by it. The market typically has herky-jerky reactions when it's surprised, and I don't think anyone's really surprised by those employment numbers. So we'll see where this goes, but I think that we're at a spot now to where we have the 50% retracement from the bearish downtrend that's kind of staring us in the face. But the second that we can get this virus handled, I mean, I know that's easier said than done. It's kind of like being a track coach and telling your runners, well, if you want to run the race, just run faster. I know I'm kind of saying a comment like that, but once we get this virus figured out as a society, we have the cheapest oil that we've had in forever. And we have pretty much free money again with the 0% interest rates that are out there. Once we get this virus thing figured out, I think the bulls will be there. But until then, we got a virus and we got 50% retracement staring us in the face. The other thing that I would add to it, I can't prove it. I've never been into the White House boardroom or anything, or the Situation Room or anything like that. But I am convinced that the president is trying to dictate policies to where he's saying, all right, I need to have the S&P above 3,200 before I hit the campaign trail in July if this virus is healed or taken care of. Because if we get that, then we're winning the re-election. And so it would not surprise me if that is what is going on in the Oval Office meeting rooms or whatever. So that is my take, and that is what's lighting up my tape right now.
Yeah, we've had listeners write in with similar things along the lines of going back to the Fed. People, the Fed's doing all this stimulus. They should just have the authority to just go out and buy SPY and then just get the direct result that they want, as opposed to all of these backward ways of doing the repos and everything else like that. Oh, what an interesting day that would be if the Fed was just out there just gobbling up SPY, left, right, Fed on the bid. That would be interesting. Mr. Rock Lobster, what is interesting in your neck of the woods these days, sir?
Well, I think it's important for the Fed to be a lender of last resort. But I also think 10 years of this ridiculous monetary TARP and twist. Actually, TARP wasn't bad because actually the Treasury made money on that. But just the constant asset buying by the Fed for the last 15 years, I think it's awful. And maybe it'll all work out. Maybe they know better. After trading for a long time, it's hard to believe that things can just keep going. You name one thing that's ever gone in one direction forever. It just has never happened. At some point, there's pushback, and
the U.S. stock market for 100 years.
Yeah, well, you know what though? But the thing is, if you go to the U.S. stock, there is pushback in the short term. There will be times when the market just sells off.
No question.
If can we continue to print money and buy assets, and all these G7 nations or the G20 nations are doing it? The whole thing is just, it leaves me with a queasy feeling. I can understand the Fed basically saying, all right, we'll buy some of these assets. Everybody's nervous. They want to dump them. And then the Fed holds on to stuff and gives them back, basically, or sells them back to people at higher prices. I get that part, where they're trying to make sure dealers have enough dollars to keep the things going. That was a big problem with the Depression, as opposed to now, as the Fed was basically out of the entire market. Banks stopped lending to each other because they didn't know who was going to go out of business. That was similar to 2008. That's why they created TARP, so banks could actually, so the economy could pump. We haven't really had this. Now they're talking about middle of May. That's another month, and that'll be 2 months that businesses are literally out of business, where there's no. And I don't, maybe it works. I don't know, but I have a hard time believing that, do we start going back to work before that? I think people are a little tone deaf by what we have going on here. The fact that you can just shut down. I mean, restaurants were the biggest employer in the nation, and now they don't essentially exist. So I think there's some crazy there. The fact that the queues are, I think, up on the year right now, I think is a little crazy. It doesn't mean that all these franchises and businesses are great, but, a lot of the stuff that feeds those tech companies, started at a restaurant somewhere or something like that. So people working at a restaurant. So I think there's a disconnect here. I don't know when it becomes undisconnected. But the pricing mechanism for debt has been dead for about 12 years. And I don't think that's a healthy thing for our economies, global economies, or whatever. Right now, the only winner in this, it looks like the Chinese government. Somehow they are coming out of this looking pretty good. And I don't quite understand how that's worked. But so I definitely have my tinfoil hat on about all of this. But the one thing I will say, as far as from a vol point of view, VIX is basically, I've been trying to buy VIX options for a couple of days, and the bid has been persistent, meaning there are times, when you trade where there's basically three levels, right? You kind of below the market, you're on the market, you're middle market, or you're taking the market. I'm sorry, if you want to make a trade, you can sit on the bid, you're in the middle, or you're lifting the offer, right? Those are basically the three speeds if you want to execute an order. And a lot of times, I shoot for the middle or trying to sit on the bid and wait till the market turns in my favor. Right now, the only way you can trade anything in VIX, I feel, is you just have to buy the offer. So there is a persistent bid that really shouldn't be happening if this rally is real. And you would think there would be some sort of decline in vol, and I'm not feeling that as of today and this week with the rally that we've had. So I think the market players overall are still trying to figure out what this shutting down for more time means. And there's a massive amount of uncertainty around this, which, kind of goes without saying. But it's still actually, if you look at sort of historic high vol levels for a period of time, at least since the financial crisis, the fact that we've had persistent vol over 40 like this is pretty darn high. Certainly, the vol apocalypse looked like a blip in time, to be honest. Like the current lows for vol we have right now are way above the highs of the vol apocalypse. And that took out two volatility products. So, you're looking at this from a historic level where even though the market has done this crazy rally, the volatility is still at an unprecedented, in my mind, high level. And if the rally was more real, that I would expect the vol to be lower relative to the price. And it just, so to me, there's a serious disconnect there. How long it can last, I don't know. But at least from vol observation goes, I think that's definitely, there's a huge disconnect between where the Qs are for sure, where SPX is, and level of vol that we have in the market right now.
I like that. How did I know, just from doing the show for a while, how did I know? I mentioned the Fed buying SPY. It's going to get your libertarian knickers in a twister. How do I know these things? It's like I just hit the button and I let you go, sir. But speaking of go, and if you want to get short forward, now's the time. I just closed off the long put leg of my ratio put spread out there. So that means it's off to the races to the downside, listeners. Get out there. Get the short while the getting is good. Once I close out the puts, you know there's going to be some more to come. But let's keep on rolling. I'll see what else is coming on the broad market here. Let's see. Let's go out to VIX land first. Let's see what the major indices are lighting up right now. As of a few minutes ago, VIX pretty light. In fact, the ADV out there is pretty light as well. The ADV is a little bit, just a tick north of 600K right now, which is not quite a third, but pretty close to what it was at the height of the madness out here. So the ADV has come in quite a bit. And today's volume reflecting that. Today, about 157,000 contracts as of a few minutes ago. So pretty light times out there in VIX land. SPY, similar deal. ADV, still robust, not quite as robust as it was. 6.1 million out there, and at about 2.53 as of a few minutes ago. The S, 621,000. The ADV is about 1.5 million. So that ADV has come off quite a bit as well. Some of that may be reflecting the challenges of getting size done in the S in an electronic environment, though some of you have some thoughts on that. We'll get to that in a little bit. The Qs, 547,000 contracts. The ADV, 739. And the RUT, or at least the IWM flavor of the Russell 2000, at about 494,000, ADV 648. If you want a deeper dive into all things Russell 2000, TWIFO in a little bit. Once again, spoiler alert, Russell 2000 leading the equity dance to the dark side. We'll get to all of that in a little bit. Speaking of the equity dance, let's see what's going on out there in the individual names. You guys love to trade so much. In fact, a pretty active day out there. The equity indices and the vol indices not doing a ton of paper, but the individual names lighten it up. In fact, it cost you over 200,000 to break into the top 10 today. Exactly 204,000. That would get you to Netflix. And right there at number 10. Number 9, NVIDIA back in the top 10 again. 225,000. Number 8, once again, these two almost identical tickers, neck and neck with each other in the top 10. Number 8, Boeing, 255. Number 7, Bank of America, 269. They love moving together in that top 10. I don't know why that is. Number 6, maybe people hitting the wrong button on their screen when they're trying to trade one versus the other, forgetting the extra C there. Number 6, Amazon, 325,000. Number 5, Roku back in the top 10, 326,000. Just a wee bit above Amazon. Number 4, Softies, kind of been locked at and around that number 4 spot for the better part of a month. You know, you got Skype, you got telecom, working from home, you got a little bit of gaming, all that keeping Softie pretty active out there. 358,000 contracts. Number 3, Tesla, day that ends in Y. Tesla's got to be up there. 433,000. Number 2, may surprise you, Apple, a meager number 2, 437,000. That means number 1, yes, our old top 10 buddy AMD making the number 1 spot today. Let's pull it out there and see what's up in AMD, listeners, because that's a rare thing to see them in the top spot out there. The stock's only up, it's about 2%. It's a good lift out here, up about $1.12 out here right now. Looks like we got some analysts giving some love to AMD today. By the way, enough for the top spot, 471,000 contracts. And you know, it is that time, listeners, where we could choose if we want to focus on some of the more micro stuff. And like we said, a lot of financials were popping off earlier this week. We saw Wells Fargo, JP Morgan, Bank of America, Goldman Sachs. We had Johnson & Johnson, Abbott Labs, a lot of big names popping off. Today, we've still got some more. We've got, what do we got going on today? Abbott reported today, actually. We'll get to that in a little bit. Bed Bath & Beyond. Rite Aid is today as well. BlackRock, BNY Mellon, KeyBank. Our old buddy, as the president calls him, Chuck Schwab, reporting today as well. Of course, we got the earnings move and now some earnings move results reports. Now that we've had some reports come in, we have the results. So check them out, theoptionsinsider.com to see all that good stuff. Let's break down a couple of them right now. Abbott Labs, our friends out there in the hinterlands of Chicago, doing some interesting work on the coronavirus testing. We talked about them on our last show. As of the time of this report, this just came in right before the show. Let's see, they were at about 92.88. They closed before the earnings at $90.94. They were pricing in about 4% of a move, and they delivered about 2%. So actually underperforming from an overall straddle perspective. Remember, we were saying these straddles are looking a little bit juicy out here, which is kind of interesting. This one, at least so far for Abbott Labs, not looking so good. What else we got here on this list? These are ones for today. This is Key Corp, ticker symbol Key. Let's see, they were pricing in about 3.7%. They actually delivered 6.3%. So moving pretty good. This is the cheapie. The stock was at $9.66 coming into the report. They were at $10.31 right before they announced. Let's see any other big names here in this report here. We got BlackRock trading right now. We'll get to that in a second. Let's see. Right now, they were pricing in about 3.1%. They delivered 2.2%. Right now, they're about 457.98 right now. So they've moved quite a bit. They closed at 443 coming into their announcement, and they were at the time of this report, they were at 452. So they've moved a little bit as well. So I think if you factor in the net movement there, they've actually outperformed their straddle. But again, these reports, just a snapshot in time. Of course, you can get those and a lot more. We got some predictive ones coming up as well for what's coming up. Let's look here. IBM, they're popping off on the 20th next week. They were at $118.70 at the time of this report. They were pricing in $5, pretty much even. And in the past, they've delivered almost $6.60, so a little light there, which is kind of interesting. Let's see. I know there's some others here. Oh, good old Netflix. You guys like to trade that a little bit out there. At the time of this report, it was $426.75. They were pricing in $20.40, and in the past, they've delivered $24.57. Interesting. Light straddles. Especially surprising given all of the other macro factors afoot. You think they'd be pricing in a little more juice this time here. There's a bunch of these here, listeners. We could spend all day doing this, but I encourage you to head on over to theoptionsinsider.com to check. Actually, you want one more? Okay, we'll do one more. Why not? Let's see. Intel, my old stomping grounds. They're popping off on the 23rd next week. They went into this report $58.87. They were pricing in exactly $2.50. And in the past, $3.26 they've moved. So, interesting. A bit of a light vol theme going in here. Let's do another one. Xilinx, really quickly, $84.16 at the time of this report. They're popping off on the 22nd. They're pricing in $4.62. In the past, they've moved $6.42. I'm seeing a trend here now, a little bit of a change of a trend, which is kind of interesting and I think worthy of note. If you want to check all that out for yourselves, listeners, theoptionsinsider.com is the place to go. Meanwhile, we have to go into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get whimsical. Before we even get to that, Mr. Rock Lobster, does that surprise you that so many names, like I was just talking about, are actually underpricing from a vol perspective compared to past movements, sir?
Oh, they're currently underpricing. Well, it's hard to. I guess it is a little surprising that you thought maybe there would be more, or just everybody's assuming that the earnings are going to stink and nobody's bidding anything up. It's the only thing I can think of, actually. Yeah,
no one's really doing a lot of love here for this one, which is kind of weird. So you think going into this cycle, I think we were talking about the fact that we expected people to probably get a little crazy over here. Speaking of crazy, this is a weird one. We got our old friend Chesapeake Energy. And oh my, what have they been up to of late is this chart looks like it's broken. It's so terrible, and it just goes straight off a cliff here to the upside here, which is, shall we say, insanity. A few days ago it was trading 17 cents, now trading $16.50. So wow, a little squeezy, as your buddy the meatball might say, a squeezy McSqueezerstein. ticker symbol CHK, listener. This one, of course, is lighting up as a result of these movements, lighting up our Eye of Sauron here as well. Let's go back a full year. Let's see exactly where we were trading a year ago. Oh, a whopping 86 cents. Actually, no, that's not even far enough. Let's go all the way back. There we go. $3.06 a year ago. And now $16.56. What a year it has been for Chesapeake Energy. Of course, they're in the old hydrocarbon exploration, a bit of a topsy-turvy space right now. But this one is topsy-turvy to another level. What do we find out? You think with a move like this, you might think maybe you see some calls lighting up the tape. Not today, at least. No, it's puts, listeners. And it's puts a galore to the tune of the Jan 2022. So we're not even talking next year. We're talking 2 year out, roughly. Puts here, listeners, on the half strike. Jan half puts. 2022 half puts going up at the time of this print for a whopping 40 cents. So, yes, I said that right, listeners. Half put, so 50-cent put, going up for 40 cents in mega clips, 10,281 times, then 6,703 times after that. All of them for 40. 40 cents was pretty much the bid, and they kept crushing it. That bid was firm. People were willing to pay it. A total of over 34,000 of these bad boys have gone up so far today. Mr. Rock Lobster, kind of a crazy one. Someone obviously willing to put aside some capital and deciding, you know what, I'll take that whopping 10 cents worth of risk, Mr. Rock Lobster, in return for hopefully a few years from now, perhaps even sooner, if this trend continues, keeping my full 40-cent allotment. Otherwise, this poor fool has to buy Chesapeake, easy for me to say, at a whopping 10 cents. This one just cracks me up all sorts of ways, Mr. Rock Lobster. What are your thoughts on this guy taking a whole bunch of 10-cent risk here, sir, for a couple of years in Chesapeake?
You know what? What the heck? I just think that this stock has such a crazy history. It was like the market darling in 2007, I think. The CEO accidentally, lost all his money and leverage, died in a car crash. Now it's zero. It's just, I guess it's the boom and bust of drilling for natural gas and gas. There's a tremendous risk in that industry that people don't quite figure out yet. And right now, all of the whole industry is suffering because nobody wants to, nobody wants to drive anymore. So, I guess you can't even drive your car that might have natural gas in it if you have a natural gas car. So, an interesting way to participate on the fact the stock is going nowhere for the next 2 years. And looking at my natural gas statements every month, I can attest that, yes, natural gas is not going anywhere for the foreseeable future. So it's the only way you can make money on that stock. Although the funny thing is I think Chesapeake reverse split, or it might reverse split. So that actually it'll be interesting to see where those puts end up. But it is an interesting and odd use of capital. But yes, they are risking about what is it? 20%. They have 20% risk on their put position right there, as far as I could tell. They're risking 10 cents. They're hopefully taking money in, and they're risking 10 cents on it. So.
Yeah, actually, you're right. That's what caused that massive spike. It was a 200-for-1 reverse split. This whole thing. If you've been suffering in Chesapeake, you have my sympathies, listeners. But this one is just all sorts of crazy. Brings a bit of a smile to my face on this weird. Someone selling 40-cent puts or 50-cent puts for 40 cents 2 years out. 200-for-1 reverse splits. What the times we live in. The old Chinese curse, may you live in interesting times, is certainly upon us here today, listeners. I would say we would put these in our to-be-watched category, but I don't think we're going to hang out for 2 years to come back to these. And who knows? Maybe we should, because this stock could be back threatening those levels again in pretty much the near future. This guy's looking at this 200 for one stock split. He's like, hey, thanks for resetting the bar for me to sell some more puts to the downside here, because there were no put strikes left. They created some new ones just for this guy to sell. So you know what? Maybe we will. Maybe we will revisit this one. Let's come back in like a month or two, because I don't think this is going to take too long to figure out what the writing's on the wall for this bad boy out here in Chesapeake. Now we got a listener saying, guys, just had a 201 reverse split. Yes, we saw that. Thank you, Catherine. Crazy Town here. All right, speaking of Crazy Town, let's keep the Crazy Town train rolling and see what else we've got here. Let's go to another name not exactly usually lighting up our tape these days on the odd block anymore is DVAX. This is DynaVax Technologies, ticker symbol DVAX, trading. If you like the cheapies, today's your day. A whopping $3.36. Up about 30 cents, or for this name, then up nearly 10%. So a good day for them. Over the past year, a year ago, they were trading $6.72, and they sold off down to, about $2.80, that $2.70 actually, down in July of last year, then rallied again back up to about almost $7 again in December. And then when all the great madness happened, they sold off again down to, looks like around $1.80 or so in that time frame there, before rallying again up to where they are right now, $3.36. So let's see. This is another biotech working on perhaps a COVID-19 vaccine. Hence all of that usual biotech vol we're seeing out there. What's our Eye of Sauron seeing is the interesting question. And looks like it's some near-term upside, but not perhaps in the way you might think. It's the May 4 calls. Usually in the biotechs, particularly the cheapy biotechs, we see people loading up for the fences when they think something's going to happen in a name like this. Not what we're seeing out here. We're seeing the opposite, actually. We're seeing the May 4 calls. It's like paper hitting that bid for 21 cents about 2,500 times. A pretty big print for a relatively small name out here. These are opening over there on the Philly. There are earnings in this cycle. Earnings are on the 7th. After the bell here, someone deciding not going to hit the 4 handle anytime soon, and taking 21 cents off the table for that privilege. Mr. Rock Lobster, kind of a bit of a flipping of the script here. Usually on the biotechs, particularly the cheapy ones, like I said, we see people loading up to the upside. This time, a little bit of an overwrite, particularly with an earnings month. What are your thoughts here on someone harvesting the old risk premium here in DynaVax Technologies?
It's one of my least favorite phrases is harvesting the risk premium.
Well, then you can never go to the CBOE Risk Management Conference. That's all anybody says down there.
These streets are filled with the blood of people trying to harvest the risk premium. I know that might be a little bit that might be a little bit it's like, what is it, graveyard humor or something like comedy. But basically you sell those calls and you buy stock and you sell a put. So you're selling a put in a $4 stock or whatever, a $3 stock. You don't have. I guess it has less risk in it than selling it at a $40 stock because you have less dollars in there. So I think as a trade, is it a bad trade? No. But why bother writing calls on a $4 stock? I just don't. Your only thing is, you think, oh, wow, nothing's going to go anywhere, and you hopefully the premium goes out worthless, and you get, and you'll end up with the stock. So certainly reasonable. But again, harvesting premium, I always find it's probably one of my, because it implies the fact that you are able to harvest anything. What you really want is things just to go sideways forever, and you should make a little bit more money than the market if that happens. So while I try to caution people on that, and encourage them, if their call goes in the money, just let it be called away. You can't get a better outcome than that. So with that type of trade, just let it happen and be happy. So again, reasonable. It would have a reasonable return, obviously. What is that? 5% return to May. So it could give you a better return than the market. and with maybe a little less risk, although it's all stuffed into one company. But you could find almost any stock out there if you sold a near the money call in May that would deliver a 5 or 6% return minimum in this market. So it's almost an embarrassment of riches for this type of trade, by the way.
An embarrassment of riches indeed. How do I know you would love this this strategy? And by love, I put in air quotes there because selling calls on a $4 stock. I know that's not your bag out there. Let's see if this one's your bag. Let's put it on the old Wayback Machine, Mr. Rock Lobster. Let's go all the way back to the crazy, heady days of February 27th. We were heading into the madness, the maelstrom. Hadn't quite hit the teeth of it yet. And at the time on the show, we profiled looks like some call activity in Hilton Grand Vacations, a name that not doing so well in light of all this. Not a lot of people going on vacation, go figure, when there's a global pandemic out there. Ticker, of course, HGV. Listeners, I'll tell you where it's trading in a minute because that's a bit of a spoiler. At the time, on the February 27th show, we profiled someone loading up on some upside. These are pretty wide. That they were 75 cents at $1.65. Someone said, I'm lifting that offer. I'm taking all of them. 5,000 of these APE 29s for $1.65. This was after the earnings already, so there was no earnings bump to be expected here. It was actually that day. The earnings were that day. So someone's saying, you know what? I'm going to swing for the fences here. I like my chances on this upside. I'm not even going to work it. It's going to lift that offer 5,000 times. The stock closed that day at $27.79, and we saw it pretty much as you might expect. This guy was pretty much on completely the wrong end of the train here. This trade pretty much never looked good. In fact, the stock hit $10.53 not that long after, on March 18th, when everything hit its nadir. The stock was at $10.53. So this guy loading up on his upside here. Just pretty much horrible timing. It has recovered a little bit since then. It's at $17.10 right now. We got expiration coming up in a little bit here, and it ain't looking like this guy's going to make his money back. This guy got all the way up to 29, unless Hilton Gardens, or should I say Hilton Grand Vacation. Hilton Garden is one of their hotels, the Garden Inn. But in general, doesn't look like it's going to hit that 29 strike anytime soon. Go figure. These calls still open out there, listeners. So it looks like at this point, paper threw away a little over 800,000, about 825,000. Mr. Rock Lobster, one of the sad ones here. We like to come back and see how these trades do sometimes. This one does not appear. In fact, it's hard to imagine this guy having worse timing on this. He didn't even work that trade. He just lifted the offer on some crazy near-term upside in HGV and pretty much got exactly the opposite, Mr. Rock Lobster. Is that your take as well?
I cannot disagree with that. I mean, talk about the whole vacation industry just gone. I don't think anybody would have predicted that in 1,000 years. So I think that's just a very sad. Those are just calls going night forever. Very sad. Kind of like the price of oil. But that's what we got. It just, are we going to get a $20 rally anytime soon? I don't think so. Even a $10 rally, you still be out money. So, just sad. I think those calls are just going nowhere. They're going nowhere fast.
Yep. And we're going somewhere fast, so we're going right into your questions. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, folks. You guys have a lot of questions these days. Let's get to them. Hopefully you guys are enjoying the Return of Options Boot Camp as well. We've been answering some of your questions out there, trying to answer as many questions as we can on all of our various shows because we know you guys have a lot of them right now. Also, I have some comments. We'll get to those in a second, too. Let's start off with this question here from The Great. The Great says, does anyone offer a pre-earning straddle basket that you can buy to trade a large number of events at once? Also, I guess he means TradeStation. Tell TradeStation I signed up this week. Well, I will pass that along to them. The pre-earning straddle, I'll have to pass that along as well to our buddy Mr. Matt over there at ORATS. I think he'd probably be the most well-equipped to talk about something like that because he actually crunches all the data for these straddle earnings move and earnings move results reports. But right now, I don't know of anyone who offers, hey, I mean, you could, of course, call up, if you have a size enough account, you could call up a Goldman or anyone else and say, quote me all the straddles. It would be an absurd thing to do, but you could totally do that. If you have enough capital, they will make it happen OTC for you, whatever you want. But that absurd scenario aside, I don't know of anyone who offers a listed all the straddles basket that you could either buy or sell. It would be interesting, certainly. And I think, actually, I'm going to put this, maybe I'll hold on to this for our buddy, Mr. Matt from ORATS, because he would have insight into whether this is coming anytime soon. I don't think it is, but it would certainly be fascinating. Probably, I wouldn't say, not an all straddle basket. That would just be insanity. Though crazier things have happened. That's why I love your questions. You always throw us curveballs. Tony Weber in the chat, he's chiming in. He says, Mr. Rocklopster, your next book, which I guess would be your first book, it should be called Harvesting Made Easy. What do you think of that, sir?
I like how our listeners, they just know how to zero right in on those sensitive spots.
They do.
Harvesting made easy. If you want to harvest something, go buy a tractor.
They love to get right to the core and twist the knife a bit in the Rock Lobster, don't we all? RV Assets chiming in saying, full electronic option trading, it works just fine. You know, I have to admit, RV Assets, I was pretty skeptical when all this was announced, when SIBO and CME and everyone else was shutting down their floors, and we were heading into that Monday with pretty much for the first time ever a fully electronic option market. I was pretty skeptical. I thought we were going to have outages. I thought we were going to have a severe downtime. I thought we were going to have absurd out trades and crazy prints. I thought we were going to have, not a lot of displayed liquidity, widespread. Some of that latter has come to fruition, unfortunately. We have seen widespreads. We have seen not as much displayed liquidity. Some of that, though, mitigated of late, thankfully. That's, I think, to be expected in any volatile environment, let alone in this fully electronic. But you have people running trading desks from their home DSL connection in their basement. I mean, these are unprecedented times while their kids are playing all over them and stuff. This is absurd. And yet the market is still even functioning, to me, is just stunning to me. So, yeah, I'm with you. I don't know if just fine. I think there still is a very viable use case for the floor in products like Eurodollars and, of course, the S, where people like their large, complex transactions. But in general, getting your 10 lots done, now, of course, you got to babysit them a bit, and spreads are crazy wide. But you can get stuff done if you're aggressive with it. Mr. Uncle Mike, I'm sure you're working a lot of orders here these days for your clients out there. What are your thoughts? Do you agree with RV Assets, who thinks fully electronic options trading works just fine, or are you champing at the bit for the floors to come back, sir?
Since this time of pandemic or whatever has occurred in my trading, I haven't noticed one bit of difference in terms of execution speed or anything like that. And in reality, I purposely get like freakish internet speed at home just in case I have to work at home. So it's probably about the same speed as what I have at my office in St. Charles. But I haven't noticed any difference personally, but we'll see what happens. But I'm cool. It works for me.
Uncle Mike, if you're jealous, Tony just chimed in our chat with a book title for you as well. And his Uncle Mike's next book should be Delay of Game as we wait for the S&P to turn positive. What do you think? He's got all these titles for us.
Well, I like that, but here's the only difference is that we're not getting for my S&P aggressive strategy. We're not getting penalized 5 yards, so I'd prefer timeout.
Oh.
I'm using one of my timeouts.
Timeout. I like that. I can go for that. We got a lot more questions here, but we got people chiming in the chat. I like to give the chat some love as well. Let's see what they've got on their brains. Catherine Corby chiming in. God, don't buy straddles before earnings. The odds are really against you, but especially now when straddle prices indicate a smaller than historic move in many equities, not a greater move. Yeah. We were joking on our network not too long ago, Catherine and everyone else out there, that it was one of the few times about a month ago, we talked about it on Boot Camp and others, where not just buying straddles actually worked out. They were insanely expensive, and yet the moves we were getting, 4+% a day in the S&P, hitting circuit breakers every other day. Long straddles pay off in that environment. Outside of that environment, which is an absurd outlier environment, they're very challenging to make work even in the best of scenarios. So, yeah, I don't think anyone in fact, that's look at that next question here from Mack. exactly on that. Do long straddles still work here? Look at that. It's like Catherine is reading our notes here to see what our listeners have on their brain. Mr. Meatball, I was just talking about this. We were talking about it earlier. Long straddles were working pretty good. Not exactly the time now for those anymore. I mean, I guess you have to pick your poison now. Be a little bit more judicious. You can't just go out and swing for the fences like you used to. Is that what you're using over there as well, Mr. Rock Lobster, sir? What do you have to say for Mac, who wants to know, and I guess Catherine, they want to know if long straddles are still the game, sir.
I'm not buying straddles anymore. I'm just kind of doing a little bit of a hybrid straddle. I think vol's still underpriced. So that's been my bread and butter strategy for 3 weeks, maybe 4 weeks at this point. So until something changes, I'm not going to stop. I mean, the thing is, we still have the market's still moving, but they've taken the vol down quite a bit. It's not 80 anymore. It's 40, but market's still moving more than the vol is. Even at this it's still a very, very high level. I mean, I think everybody's just getting slapped in complacency that we're at a 40 vol. Like, oh, it's okay. It's only 40 vol now. It's like 40 is still pretty damn high. See, everybody, they forget that's still deep into the danger zone. Deep, deep, deep.
Yeah, people think they've just become complacent, right? 40 VIX is, it's just a 40. But you do have to be a little more judicious these days. And back a month ago, you could buy a straddle. We had Brian come on here on this network and talk about a long straddle in USO. And it worked out amazing. Gang, it was a home run. Who would think of buying a straddle in around $5 stock or an ETF would be a home run? And it was. And that's the kind of environment it was in just about a month ago. I mean, still, you have to be a little bit more judicious now. But Rock Lobster sounds like he's a little more open to the cause over there. You guys are a bunch of chatty Cathys here today. I love it. But let's see. Okay, so all you email people, you have to wait a little bit. Let's see. Mulvey says, I'm guessing the SIBO floor is gone in the next year. If you told me CME floor, I'd probably be more on board with that because CME has been against keeping their trading floor around for quite some time. They got rid of the futures a while ago. They've been looking for an excuse to shut down the options side. They don't want to be in the trading floor game anymore. And they have Globex, and Globex is a pretty reasonable facsimile to what they have going on out there. Every time you talk about volume at CME, they always make sure they talk about the percentage that's going up on Globex. That's like the leading bullet point for them. So they're very much gung-ho to move away from the trading floor. SIBO, different story. They have SPX, which is a legacy storied pit-based product. VIX, obviously, as well. Less of a story, but still down there. Those are the two remaining big pits, and those happen to be their proprietary products. They have a lot of vested interest in that game, and having been in the S myself, that pit, pretty well established, that pit committee, pretty strong, pretty powerful. So they'll probably want to get back to business. I don't see SIBO going that way anytime soon, because there still is a core of the customer base out there that likes the high touch stuff, particularly in the S. And of course, Eurodollars is another component to that, but CME thinks they could take that electronic and looks like they're doing all right with it. We'll get more about the volume in Eurodollars coming up on Twyphone a bit. But yeah, I don't think SIBO would be, but CME, I would probably agree with you. What is the name there? Mulvey. Mulvey. Let's see here. I can't even read that handle. Zoosufer3, 3R, wants to know, off topic, let's see, run up against it really quickly. Any pros dabble in the Bitcoin option space yet? Thanks, Alex. Alex, I encourage you, check out our Crypto Rundown show that airs pretty much immediately after this show on Mondays. And if not, you can check it out. If you subscribe to our podcast network, it's all there. Check out that show. We do a whole huge deep dive into crypto options. That's pretty much the entire show. Crypto options, flow, OI, what's going on, volume, skew, volatility, all that stuff. Deribit, not so much on CME. Stuff isn't going up there really yet, but Deribit, LedgerX, OKEX, all these other venues that do some paper backed as well. We talk about all of that. So check out the Crypto Rundown. We'll have to table that for this show as well, though, because we have to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, it's that time, like the man said, where we look ahead, tell you what's on our trading screens for the rest of the week into the weekend. Speaking of trading screens, looks like my Fort fill is only a partial. So maybe you don't have to worry as much about Ford turning to the dark side here as well. We'll see if I get the rest as I go around the horn here. Let's start with the Uncle list of Mike's. Mr. Uncle Mike, sir, what do you have on your radar for the rest of the week into the weekend?
Well, I'm watching the SPX, wanted to see if we can break through the mark that I was talking about earlier in the show. And wanting to see if people don't want to go home long or don't want to go into the weekend long tomorrow. So it'll be interesting to see the trading action that we have tomorrow. And as always, continuing to watch Twitter and now the press conferences every day.
Yes, good, or should I say terrifying theater, those press conferences out there. And I can't imagine there's a strong contingent of folks who want to sit on a ton of weekend risk. We talked about that before here on the show many times. A good time to cull your weekend risk if it's at all possible, listeners. Mr. Rock Lobster, same question for you. What is on your radar and indeed the Vol Trading Club through the end of the week, or at least until we gather together on Vol Views again tomorrow, sir?
Vol Trading Club, trying to buy some VIX butterflies, and no luck so far. But stop in at Vol Trading Club for our weekly webinar on Wednesdays. And yeah, I guess New York just announced May 15th. So somehow we're going to keep the economy down, shut down another month at a cost of $2 trillion. So sure, I guess it'll all be fine. Money for everybody. So I do despair, but anyway, that's where we are. Hopefully we're back in business before May 15th.
Uh-oh. The Rock Lobster, who's usually full of despair, is even more full of despair. Perhaps we hit a dark period here for the markets. Hit a dark period for this show as well, listeners. That music means we've come to the end. But if you're listening live or after the fact even, you say you want more, don't worry. We got more coming for you in a little bit to talk all things going on the futures options side of the fence. So, spoiler alert, probably going to talk some crude because that's pretty much on everyone's tape these days. Probably some rates, probably some metals, a bunch of other fun stuff as well. Tune into TWIFO to see exactly what the heck we're going to talk about. We never know. That's what makes that show so fun. It's coming up in exactly half an hour if you're listening live. We'll beam in some fun stuff in between. Maybe some boot camps, maybe some options playbook radio, and tune in again in a half an hour. Other than that, though, we'll be back tomorrow on Vol Views. But before we do that, let's go back around the horn, see what everyone else has cooking that may interest you. Mr. Uncle Mike, let's start with you, sir. If folks are saying, I want someone just to hold my hand in these markets right now, walk me off the ledge, maybe roll my puts for me, where should I go? What should I do, sir?
If you're on the fence and curious, should I get back in now or should I wait? What should I do? Contact me. I can help you use options to where you can, in a lot of cases, have a very comforting risk of where you're getting into or getting out of the market. 630-885-0017 or visit my website at stcharleswealth.com.
There you go. stcharleswealth.com is the place to go. And last but not least, Mr. Rock Lobster, if someone wants to join a cool ball trading club, maybe they want to suggest titles for your next books as well, where should they go? What should they do?
Go to optionpit.com, look at memberships and all our goodies. And we've taken on a lot of subscribers lately, and they seem happy. So pop on in and put your learning on about how all this volatility stuff works.
Put your learning on, indeed. Optionpit.com is the place to go. Join the Cool Ball Trading Club. Learn the secret handshake. Get the keys to the kingdom. Get a sweet hat as well. Optionpit.com. And on behalf of the Rock Lobster and the Uncleist of Mike's and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live. Don't worry, we'll get to more of your questions. I keep saying we should do more just Q&A paloozas because you guys have so many. Maybe we will do more of those because you guys have a lot of them. And we'll see you back here in a little bit for TWIFO, tomorrow for Vol Views, then we do it all again on Monday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.